China flu, and that no one in her family gets the China flu because that would be kind of bad. And I also hope that she gets whatever birthday present she wants, and she enjoys her 18th birthday.
Save some for the rest of us.
18th birthday. Had you not thrown a grenade at China, that would have been perfect.
Yeah, sorry, I had to throw a grenade at China. At least I didn't drop an atomic bomb.
Boy, this is getting off the rails fast. All right.
Okay, my birthday blessing to Ashlyn is to wish her the best in school so she stays eligible to play basketball.
Oh, that's good.
Because she loves basketball, and I hope she enjoys her 18th birthday. I hope she gets great gifts. I hope she stays really nice because she's such a great person. And yeah, that's my blessing to her.
Oh, that was beautiful. That was way better than the first blessing. All right. You didn't deserve that. I'm sorry.
No, it's okay. I get it. I throw grenades at China. I get it.
Final birthday blessing. Here it comes.
My birthday blessing for Ashlyn is that now that she is 18, she can have a chance with my roommate.
Yeah.
Oh,
Oh, man. Listen, Grace Bridal College, let's just let her be a young woman at 18. No dating until you guys are 25, all right? My word. All right, clear your throats. It's time to sing happy birthday. I'll start because I have a beautiful voice. You guys just come on in. Happy birthday to, I'm watching you, Kenna. Happy birthday to you. Happy birthday, dear Ashlyn. Happy birthday to you.
Thank you. Thank you, Bruce.
All right. Now that we're all awake and looking like we're about to have a great time, let's talk about how we're really doing. This is the time of the semester where I decide if we get through chapter 3 and then we go back and do review so everybody's comfortable, or we just say, we're crushing it. We know what we're doing. Let's get straight into chapter 4. With a little show of thumbs up or reaction buttons on the bottom right hand of your screen. For the group of 4, you're going to have to do this with your actual fingers so I can get a good feel. Who wants to burn straight into chapter 4? And who wants to take one more week of review? So just for take one more week of review, let's see the thumbs up or a reaction or something so that I can vote. Stay in review and spend a little bit more time getting the basics. Put your thumb up if you want that. All right. Then we're going to keep on reviewing until we have debits and credits and T accounts and journals and ledgers just smashed into our mind. So that's what, after you guys are done with chapter 3, we're going to take a breather and we're going to do a review section that goes back through chapters 1 through 3. I'll introduce you to a couple different mediums, like different types of people and how they describe it. So we'll go into Khan Academy a little bit. Have you guys used Khan Academy before? It's awesome. And it's a nice way to view this stuff through the lens of somebody different from McGraw-Hill Connect or me. And I think that's helpful. The next thing that I want your vote on, chapter 2 is the first time that you guys did not read a textbook. You just got your information from the video learning section of Connect. The question I have for you is, do you want to keep the book reading? I want to keep on doing the Learn Smart, that's helpful to me, or just assign me the videos and let me look through the book as I'm answering the questions and Connect. So if you want to do just video learning with no book work, let me see a thumbs up. Kind of split. All right. Ashlyn, it's your birthday, so you're going to decide this one for us. And nobody felt real determined. So for your first birthday present from me, Ashlyn, what do you want the rule to be? Stay with the online textbook or just let videos and hunting through the textbook to get the work done?
The first one.
All right. I'm gonna keep that because you guys can always go to the book and read it on your own. And that means I'm gonna keep on going with just straight up video lectures. I noticed that you guys were spending a lot of time in there. And I believe that what I'm seeing in the assignments right now, this group of people in front of me, your average is 85. So like, I'm thrilled, and it's just evidence that I am the best teacher that ever sat in this chair. I'm the only teacher that's ever sat in this chair. Listen, we have a lot of stuff to go over today, but I just want you all to take a breath and realize, like, this last 2 weeks, you guys put in a lot of computer work and it's showing. And when I went through all of your notes and saw that you guys are really spending the time absorbing all this during lecture, I was just really thankful. We are recording this lecture. We have the class at Tri-Unity Christian High School is taking this class at the same time as you guys. So they're not here. They watch the recorded lectures for credit, but I just want them to know that what I see out of you guys in terms of note-taking and questions, I mean, I'm thrilled. So today we have to cover chapter 2. I put an in-class assignment in here that we're going to do to just talk about the links between the different financial statements. But in order to center this where it needs to get centered, let's take a minute and just reflect on how in the world accounting can bring glory to God, right? Like that's what we're here for, is how do we take a look at this and find the link back to our faith and work. And you guys have seen me discuss this, and you will over and over again, but it's this concept of your work is your calling. So this is a 2-minute video. Let's take this. I'll ask if anybody has thoughts, if you have anything that you wanted to highlight, but let's just take a look at this. And then after 2 minutes of putting this in perspective, we'll get into the lecture.
What pops into your head when you hear the word? The hands of a clock crawling slowly toward 5? Endless meetings? Stacks of paperwork? Just hanging on for the weekend? For that next paycheck? Or maybe it's the thrill of success. Closing the deal. Hitting your numbers. Finding the thing you were born to do. Whether you love your career or hate it, or more likely land somewhere in between, one thing is certain: you'll spend a huge portion of your life at work. So one of the first words that should pop into your head when you think of work is worship. As Christians, if we aren't on staff at a church or out on the mission field, sometimes we feel that we aren't truly doing God's work. Like we're second-class citizens in the kingdom of heaven. But God makes it clear that whatever our hands find to do, we should do it with all our might. We work with all our hearts, as for the Lord and not for men. We're called to worship God with our work, whatever it may be. Worship isn't just a Sunday morning event. God doesn't wave goodbye from the church and say, "See you next week." He's always with us, and every aspect of life is an opportunity to bring Him glory. For most of us, our workplace is one of the primary places we can put our faith into action. We work to fulfill our God-given responsibility to provide for our families, to financially support our local church, and the advance of God's kingdom at home and abroad. At work, we love and serve coworkers and customers in word and deed, knowing that we'll encounter many who have never set foot in a church. And as a representative of Christ, we operate with integrity. In doing so, we earn the right to be heard. We work with excellence because we serve a master craftsman, the very maker of heaven and earth. From the very beginning, He created us to work. It's not a punishment, though at times it may seem that way. It's a high calling. So the next time you think of work, think of worship, because work is worship.
Guys, I do a little bit of coaching with business owners and entrepreneurs. And a lot of times the conversation always comes back to faith, right? Like what should I be doing to honor God, right? And these are people that run businesses of 100 employees. And they're saying like, I want to come down and visit you and do a mission trip. And I'm like, that's great. I always want visitors. I always want people to come and serve with me. But if you have 100 employees, you have a custom made audience to bring God glory. Now, there's a different way to pursue sharing your faith at work. Who's an example of somebody I can use? Who has a job in a business that we would all kind of know or understand? Who's working in a company? Is anybody working? Oh, you guys, come on, somebody's working, right? Please, somebody's going to work this week.
I am.
Oh,
Work
hate
at
it.
a Italian bar.
An Italian bar. So your job, are you a bartender?
Server.
Okay. How can you share God? And this is really important, guys. And I want you all to think about it. Put your mind in the role of a server. How do you share God at work without being a really strange duck that really makes people uncomfortable? Because that's the other thing, right? Like Hayden, you can't say like, what would you guys like to order? And oh, by the way, I'm feeling filled with the Spirit. Can we pray a second? Would that be awesome? It's not realistic, right? Most people that you don't know well during a pandemic, during this, like they're not going to want the stereotypical hold my hand and pray when they're out for dinner. So how do we, as people that want to share our faith in an authentic and genuine way, how do you share your faith as a server? How do you walk in and say, you know what, I'm going to try to honor God today? What does that look like? And how do we, as people living in the year 2021, where Christianity is always under fire, how do you share your faith? Hayden, how many of your coworkers are just a whole lot of fun, and after they're done with their shift, they go out and drink and party and do whatever they want?
Most of them.
That's most of them.
Yeah, most of them.
So how do you, as Hayden, share faith and still be somebody they want to hang out with? This is the trick for all of us, right? Like once you leave the bubble of Grace Christian University, the world won't look anything like this place. And some of you just got here from transferring to another school and you're like, this place is not normal, right? Like people don't talk like that. People don't operate like that. It's all internal. Are you praying for the people that work with you? If you notice somebody having a bad day at your restaurant, do you stop and just say, looks like you're struggling today. I brought you an extra Coke. I brought you an extra sweet and sour sauce. Like it's kindness, right? Kindness is missing out of your society. And this might just be the golden age of Christianity, where just being kind to people will make them stop in their tracks and say, what's different about this person? That's our job. It's missional living. I've moved across the world twice to be a missionary. And whenever people ask me about how to serve God, I always tell them to do it right where you're planted. You don't have to move. You don't have to go out. Hayden, you might be the only Christian in your work. Learning how to introduce that to people, I don't want to call it an undercover way, but really you almost have to, right? If you came in guns blazing to a bar environment as an on-fire Christian, you could scare everybody away, right? So I just want you guys to think about that. As you progress through this program, it's being your authentic self and showing kindness and actually praying for God to do all the heavy lifting with the people that you're around. Now, Hayden can't say like, hey guys, it was a tough shift. Everybody circle up. We're going to pray before we leave, because half of his servers are going to the bar. Half of them are mad at the church and won't ever go back. That probably won't work. But if Hayden walked in and said, you know what? God, I'm going to work today and I want to serve you. So if you set it up, I would love an opportunity to talk about you with someone. Think about that prayer. Think about how genuine and honest and real that one is, and how different it would change your world. Does that make sense to everybody? All right. Let's get into what we need to talk about. So before I pull up my screen, chapter 2. What do I need to talk a little bit more about? That is due tonight. I've got about 7 of you that are finished with it, and it went really well. Like, I don't have anybody that just bombed it. But is there any concepts that you want to chat about concerning chapter 2 before I get in and polish up that lecture and then move on to 3?
I would say T charts.
T charts. Oh, okay. Let me introduce you guys to, I'm making an assumption that all of you learn via YouTube at this point in your lives, right? Like, if you want to know something, you just jump on YouTube and say, I'm going to watch this because I fell asleep when DeYoung was talking, or I was texting my buddy and I have no idea what he said. That all happens. I'm going to introduce you to a YouTube channel for accounting that I think is valuable. Will you guys watch 10 minutes of video with me and tell me if this is valuable for class time or if I should just assign it to you in the future? So grab some notes, find a way to keep track of your notes. I'm not going to put a spot up for your notes this week, but I will the following week, but keep on doing what you did last week. Like, I believe that all of you learned better because I forced you to take notes. And this week you're going to get points for an in-class assignment, and everybody's going to get the points as long as you do it. So don't have any fear there, but take some notes and listen to somebody more handsome than me with a really cute accent describe accounting, and maybe it will help it click a little bit more. So do we want to spend a little bit more time on?
Hi, my name is Jake Stuns, and I'm the Director of Business Accounts at Right Now Media at Work. I wanted to take some time today.
Let me ask you this right before we start. Debits and credits, do we need to spend a little bit more time on debits and credits and T accounts, or debits and credits you feel good about? All right, so I'll let you guys, if you want to know more about debits and credits, I'll let you guys search for that. Let's go to this YouTube channel and just focus on T accounts. So the name of this channel is Accounting Stuff, and I just like the way he describes a lot of these concepts. So we're going to go through T accounts. We're going to watch his video that's 11 minutes long, and then we'll make sure that this is something we want to watch in the future.
Much better. Today's video is all about T accounts. I'm going to explain what they mean, how they're used, and what this is all about. Hey, it's James here, back with another episode of Accounting Stuff. Today's video is the third in a series that I'm creating on accounting basics. If you're new to the channel, then welcome. Don't forget to hit that big subscribe button below and click that little bell so that you don't miss a thing. In this video, things are about to get real. We're going to dive deep into T accounts, which are a super useful way to help you visualize what accounts are and to keep a track of all of those debits and credits we talked about last week. Don't forget to watch this one through to the end because I'm going to run you through a whole bunch of useful examples. Now, who's ready for some T accounting goodness? Let's do this. To kick things off, I would like to lay out the definitions of some important terms that will crop up throughout this video. First, what is an account? An account is a place where we can record, sort, and store all transactions that affect a related group of items. A T account is a visual representation of an account. It is called a T account simply because it looks like a T, and it looks like a T so that we can easily distinguish between all of the debits and credits that impact it. If you're unsure what debits and credits are, you might need to pause at this point and watch the video that I posted last week. You'll find a link to it in the description below. Finally, what is the general ledger? It's a place where a business stores a complete record of all of its financial transactions and accounts. Now that I've clarified these terms, let's get back to T accounts. In its most simple form, a T account looks like this. Debits go on the left, credits go on the right. If you are having a hard time remembering the sides, you can add a little DR and CR to the top of the T account. DR and CR are how we accountants write debits and credits in shorthand. Last week I taught you a simple way to remember which accounts are debits and credits. Dealer. D-E-A-L-E.
All right, for everybody, take a minute and write this down for sure, okay? Remember how I told you, like, if you're gonna get a tattoo, do this exhibit 2.14, and I like his way of explaining this as well, and it might resonate with you a little bit more. So make sure that you write down this dealer concept in the video, because I think that you'll find it really valuable to making those connections really quickly in your mind on where's a debit and where's a credit going to go.
E-R. Dealer. Dividend.
I'll go back a second just so you guys can snap a picture of that with your phone or whatever.
Debits and credits. Dealer.
All right. So take a second, snap a picture on your phone of what this looks like. The way that it's described, which makes it a little bit easier, is you now can remember that dealer, DEA, dividends, expenses, and assets, they always increase when debited and decrease when credited. So this may be just a little bit easier way than the chart that I had you guys look at over and over again. And then you have on the second side, liabilities, owner equity, and revenue. Those always increase when they're credited and decrease when they're debited. The other really important thing, and this is something that it takes lots of accounting students some time, debit and credit don't mean anything. That it doesn't mean one goes up, one goes down, your debit card, your credit card, none of that terminology needs to have a connection in your brain. Debits and credits are the words that the accounting world uses to describe the left-hand side and the right-hand side, because in accounting, what we learned last week is there's two opposing equal forces in all financial accounting that helps us keep track of our businesses better. All good? All right.
D-E-A-L-E-R. Dealer. Dividends, expenses, and assets go on the left. These increase when debited and decrease when credited, whereas liabilities, owner's equity paid in, and revenue go on the right. These increase when credited and decrease when debited. Now we will run through a quick example to illustrate this. Let's say your business has a cash account with $100 in it. That's your opening balance. You take out $40 to pay a bill, and then you decide to take out $25 more to buy some new supplies. So you are left with $35 in the account, which we will call your closing balance. Balance, by the way, is another way of saying total at a point in time. So here your opening balance means your total cash at the beginning, and your closing balance means your total cash at the end. Typically, when you are doing a calculation, you might choose to lay it out like we have done here. However, when you're using T accounts, you would show it like this. Cash is an asset. That's the A in dealer. So debits increase it and credits decrease it.
Guys, see how just this side would be how we would normally write this out as normal human beings that aren't in an accounting class? We had 100 in cash, we paid a bill for 40, we bought supplies, here's what's left. In the language of accounting, we move it into this T account. It's saying the exact same thing. We have 100, but this is debit because it's an asset and it increased. So we have 100. Then we pay a bill, we credit it because it decreased. And we buy new supplies and we credit that because cash decreased. And now on the bottom is our normal balance or our closing balance. Both terms you'll see.
Like I said before, debits are on the left and credits are on the right. The final balance is still $35. it is a different way to present the exact same information. The benefit being that it is easy to distinguish between all of the different debits and credits. In this case, your closing balance goes on the left-hand side because it happens to be bigger than 0. However, if your supplies had instead cost $65, then you would be left with negative cash or an overdraft of $5. So your closing balance would go on the right-hand side instead. Now you might be thinking, why is all this necessary? I can already tell from that little calc that I did there. Well, this is a simple example for demonstration purposes. In reality, T accounts are way bigger than this. Splitting out debits and credits allows us to spot things quickly in the general ledger. If you're new to accounting, it can be helpful to jot down T accounts as you're working through a problem to help you visualize this all in your head. Eventually, you might not need to do this anymore because your brain can just naturally process this, but it takes a bit of practice to get there. Okay, so now I have another term for you, and we touched on this one last week. Double entry bookkeeping. This means that every accounting entry has an opposite corresponding entry in a different account. In the context of T accounts, this means that to record a transaction, you will need to write down both sides of it in at least 2 T accounts. You might want to pause the video now and grab a tea or a coffee or something to get in the zone for this next bit, because I'm about to take you through some examples of double entry bookkeeping with T accounts. Okay, let's get to it. Now you might be wondering why I was cleaning those windows at the start of this video. Well, I've recently started my own window cleaning business. I'm going to take you through some of those transactions that took place in the first month of operation. First of all, I, the business owner, invested $100 of my own money into this window cleaning business. And in return, the business issued me $100 in stock. Then, the business decided to take out
This is important for you guys to understand, and it's just a topic of regular old financial business that you probably haven't run into before. What is stock? What's the stock market, right? I own some shares of Apple stock. What does that mean? It means I'm a part owner of the business, right? Whenever you purchase stock in a business, you become part owner. Now you might say, man, you guys got to meet my professor. The guy's the owner of Apple. Well, not really. I own 0.000000014% of Apple. So they probably won't listen to me when I tell them what I want out of the business. But whenever you give money to a company in exchange for ownership, that's what stock is. So in the stock market, all of those companies are owned by Americans, or people from all over the world own all of the shares of these big companies. So stock is ownership in a company. Guys, is this video helpful? Yes, you would show these again. Now, is there more value in me showing this during class because I know that you'll actually watch it? Or is it something where you should say, like, don't assign me YouTube, like, don't watch YouTube videos with the lecture time that I'm paying you for, like, teach me, I can watch those on my own time. Show of hands, YouTube video learning during lecture, or a thumbs up or whatever. Keep this method going. Sweet. That makes me feel much better, because it's literally like my only tool in the toolbox is watch a video about something that everybody thinks is stupid and get excited about it, and pray that you guys get excited about it too. All right, let's go back in. We're going to watch a couple of his, and then we'll move on to stuff that's more relevant to the Connect work that you're doing.
a further $200 loan from the bank to fund its activities. Soon after receiving the bank loan, the business spent $30 in cash on window cleaning equipment. Next, it spent a further $50 on cleaning supplies. The supplier offers 30-day terms, so the payment was made on account. Finally, the business gets its first client and makes $150 cleaning their windows. But in doing so, it uses half of its cleaning supplies. The first transaction affects 2 accounts, cash and stock. So we will need T accounts for both of these categories. Cash.
And we would never call it stock. This would always be supplies. This is one of the differences between the United Kingdom and the United States, but supplies is what we would call this. You'd never see one called stock in all of your accounting homework.
Is an asset. Like I mentioned earlier, it's the A in dealer, so debits increase it. I therefore need to put $100 on the left-hand side of the cash T account since debits always go on the left.
This is just a public apology. I don't know why I said stock was supplies. He's actually talking about issuing company stock. I retract what I said. Don't tease me about it later. It was just a mistake. All right.
Stock is a form of equity which represents the second E in dealer, so credits increase it. Credits always go on the right, so we will need to put $100 on the right-hand side of our new stock T account. Moving on, in the second transaction, a business takes out a $200 loan from the bank to fund its activities. This transaction affects cash and loans payable, which both need to
Loans payable, what does that correspond to? An asset, a liability, or an equity? Loans payable, asset, liability, or equity? Ryan Cronkite for big bonus points.
Liability.
My man, nice work. Whatever you owe, anything that says payable, it's always going to be in the liability portion. So taking a loan out from a business, you're creating a liability and you're taking in the asset of cash.
increase by $200. We already have a cash T account, so now we'll be needing another one for loans payable. The cash part here is straightforward since we've done this already. We need to debit cash a further $200. Loans payable is a form of liability, the L in dealer, so credits increase it. The $200 increase in our loans payable is recorded in our T account by adding it to the right-hand side. In transaction number 3, the business spends $30 of its cash on window cleaning equipment, so we need to credit cash by $30 to decrease it and debit our new equipment T account by $30. We record the credit to cash by adding $30 to the right-hand side of the cash T account, since credits always go on the right. Equipment is another form of asset, so the debit to the equipment goes on the left-hand side. Next, our business spends a further $50 on cleaning supplies, which it pays for on account. Paying for something on account means that you agree to pay the supplier at a later date. So for now, you need to hold on to that cash, but you need to recognize a liability since you owe the supplier for the goods they sold you. Supplies are a form of asset, so we need to create a new T account for supplies and debit the left-hand side of it by $50. We owe $50 to the supplier, so we need another T account for accounts payable. Accounts payable is a liability, the L in dealer, so we need to credit the right-hand side of the T account by $50. Is your head hurting yet? We only have one transaction to go, so it'll all be over soon. In our last transaction, the business gets its first client and makes $150 cleaning their windows, using half of its supplies in the process. This one is
When a business makes $150 by cleaning windows, what is that called in accounting language? Elena, when a company earns money, what is that called in accounting language?
Revenue.
That's revenue. Great job. It's Cooper, that excitement, man. 10 extra points for you some way down the road. Good job, man. It's revenue, right? That's a big deal. We should all be excited. That's what the business is made for. When I sell ice cream, it's revenue. When the window cleaning business goes out and does work for a client and gets money, that's revenue. Now think about that dealer, the dealer across. Where does revenue come in? DEAL, dealer. Well, you guys all took a picture of it on your phone, so I'm sure you can see where revenue shows up, right? Now you know when revenue increases, well, it's not a debit, it's a credit, right? And the cash that comes in, that's going to be where the debit shows up. So it's either going to be accounts receivable or it's going to be cash that comes in. That's what happens when revenue is created. You either say, don't worry, pay me later, and it's accounts receivable, or you take in the cash. And cash comes in and you don't have to do anything further with it. Nod your head if you're still with me. Do you feel like this birthday lecture is going okay? Is there anything I can do to make it more stimulating? Oh, you're happy? All right. I don't want to ruin your birthday with accounting lectures. So if you're happy, we'll just keep on motoring. All right. Do you guys want to spend any more time on that video, or do you feel like you've got a good feeling for the nuts and bolts of T accounts? We're ready to move on to something else. All right. Then what I want you guys to do is open up your accounting or your Connect work. And we're going to go into Connect and we're going to do a problem together. And when you're done, you'll all get 60 points of free accounting points just for being here and staying up on everything that we're doing. So if we go into my screen, McGraw-Hill, this is what your accounting looks like. And we are going to go, can't stand that. I can't see you guys on the side of my screen. Hold on. All right, so this is what it looks like. You're going to go here where it says in-class assignment, chapters 2 and 3. This is a 60-point assignment. We're going to do it together on the screen. For you, group of 4, just take pics or rewatch the video, or wait, it's your birthday. So group of 4, just text me your name, since it'll take me a couple more weeks until I have all of them, and I'll put everything in as part of the birthday present. You just listen and stay relevant, okay? The rest of you got to turn it in. So what we're looking at here is clicking on this assignment, and we're going to get into something where we talk a little bit more about income statement, retained earnings statement, and balance sheet, which I think is something all of us are going to need to know. 4 of you are already in there. Well played. And I'm going to do student assignment view, because whenever I click on these, it just gives me all the answers, and I feel super smart about it because I know all the answers. But now I'm going to lay myself out and deal with the same thing that you guys are doing. If you'll notice on the right-hand side of your screen, I am doing something really cool for another birthday present for Ashlyn, and it's got the check my work tab, which means you put an answer in and it's wrong, click check my work, Connect will tell you it's wrong, and you can keep on going until you get all the points. This is just an in-class thing. I have accidentally kept check my work on for a couple of assignments. Take it as a bonus, but you can check these out as much as you want. But let's start right here. What is an income statement? What does it measure again? Zerfus, you're the smartest kid in the class. What does an income statement measure?
I'm not 100% sure.
I'll give you the first one. It's sales. Sales or revenue is the first thing that an income statement measures. The second thing is expenses. So it goes sales, expenses, profit. Now, whenever Connect gives you a list of all of these accounts and tells you to create these, this is what we're working on today. So the first thing for an income statement, we're going to pull this up, and we're just going to go drop down by drop down. An income statement, does it measure a period of time, or does it measure today at this moment, this is what we have? Now, one of the things you're going to want to remember is that an income statement always measures a period of time. What were our December sales? What was our 2020 sales? The income statement will tell us everything from a period of time. The balance sheet is on this day, the year of our Lord, September 16th, we have these assets, these liabilities, and this much equity. That's what it is. But an income statement says everything we did this month, here's the sales, here's the expenses, here's what money got left over at the end of the day. So this one is for the month ending December 31. And the first thing we want to do is put revenue at the top. That's always what we're going to do for the first 2, is put revenue at the top. Now we have to look up here. Which one of those describes revenue? Cooper, this is your moment. All eyes are on you. Which one of those describes revenue?
Consulting revenue.
Yes, that's it. It actually says revenue. We can look through here just to make sure. Now, when we use this drop down,
Mr. DeYoung,
yes,
when I go into the McGraw, it is asking me to renew my license for my book.
okay, in Blackboard, there was an email on the announcements that came through that said connect codes. Here, I'll just show you while I got my screen pulled up. So if you go into accounting here, and there's something called connect codes, you're gonna just have to pull your code right there and input it.
Okay, perfect. Thank you.
Did everybody else see that too? This is the first semester where I haven't ordered codes and had one batch of them be wrong. So I'm just waiting for the other shoe to drop. But at this point, I'm really happy that everybody's in and has full access. All right. So consulting revenue, then we just type in the amount of consulting revenue. Now, because all of you are on a different type, your numbers might be a little bit different than mine, right? I organize it this way so students just can't copy everybody. I make sure that the numbers are all changed. So yours might say 27,000 or it might say 27,500, whatever it is, put that number in and you'll see that the software automatically says total revenues is this. Now you don't have to do anything for this drop down because there isn't another revenue account. In some of the questions, there'll be two forms of revenue. Like the company earns revenue by renting out its office space and earns revenue by selling their product. Does that make sense? But if you don't see two categories of revenue up here, you don't have to worry about it. So we're going to leave that blank. And now the next drop down, well, we know that we have to start talking about our expenses. So revenues, we got total revenues. Now we have expenses. We go back up here. Which one of those translates into an expense account? Group of four. Pick your announcer, your spokesperson, and tell me all of the revenue or the expense accounts that you can see up here.
Rent expense, salaries expense, telephone expense, and miscellaneous expenses.
Great job, Ashlyn. It's her birthday, man. Don't be a glory hog. This is for her. Then all you have to do, guys, is pull down the expense categories. So the first one is rent expense. And type it in up here. Rent expense of 95.80. Next one is salaries expense. Of 56.30. Next one is telephone expense of 900. And stop me if you guys need any clarification or why things go the way that they do. There's no bad questions, especially in week 3 of accounting. Like you have way more questions than answers, and that's okay. And our last one is miscellaneous expenses for 540. Now, this is the part where sometimes students can get confused because they're going to want to add something to the dropdown. Like, come on, there's got to be more expenses. The computer program has more. If you know that you have all of your expenses listed and all of your revenues listed, then the only thing to do is to subtract your expenses from your revenue. And that will give you your total number. Now, let's say that I put 54 bucks here, right? Just because I didn't want to do the work. If I click check my work, look at that. Now it tells us you did everything right except for this. So for the in-class assignment, now you can go through and say, okay, I got to return to the question because I got that one wrong. And we're going to, well, let me see if I can pull up my calculator here. Just so everything's on the screen that you guys can see. So we simply take 2720 minus 16,650. We made a profit or a net income of $10,370. $10,370. Now I'm going to click check my work again just to make sure that I can move on and get all the points for free for being in class and paying attention. Everything looks good. Nod your heads if you can do all that on your own without any help. Hayden Watkins, I'm waiting for that head to wobble until I move forward. All right. Number 2. Now, guys, this is really important, so write it down so you don't forget. You need to do the income statement first because you cannot do the statement of retained earnings until you have this net income number. And you can't get the net income number without creating the income statement first. That makes sense to everybody? In order to move on to the statement of retained earnings, you have to do the income statement first because you need that number to pull into your next one. So let me just show you so it'll make more sense. So we go on to number 2. We know we got everything right. Now it says statement of retained earnings. Statement of retained earnings. Now, what does that entail? Some of you are saying, I have no idea. I have no idea what that is. Then your job is to click on either the hint or the ebook so that you can find it. Does everybody know how to, does everybody understand how to use the hint and the ebook functions of Connect to find your answers easily? Just nod your head so I know whether to spend time on that or not. Okay. If you didn't know what was on there, but we know that retained earnings, December 1. So we're going to look at this drop down. What's the first thing that we have to put in there? Well, you know what? It's net income. Net income is always the first tab on your statement of retained earnings. And you have to pull that from the second question. You have to pull that from our answer to the last question. So I know that my number was, well, we'll go previous just to make sure that we have it. 10,370. That has to go into this one, and it's not listed here at all. So net income of 10,370. What's the next thing that we have to take into account for a statement of retained earnings? Camden, I just got your text that we're best friends. You said dividends. You're right. It's not true. He didn't text me. He probably hasn't even saved my number yet, even though I want to be his friend. It's dividends. What's dividends? What does that mean? What is a dividend and why is it on the statement of retained earnings? Parker, you'll know the answer, right?
It's the money paid to like shareholders and stuff. So.
That's exactly right. Without getting too much into the nitty gritty of how ownership is structured, most of the time in most businesses, there's one owner. Whenever that owner takes money out of his own business or her own business, it's called a dividend. Whenever the business gives money back to the owners, it's called a dividend. So if we click back on here, we pull up dividends. So we add net income, we subtract dividends, which is money that was taken out. And in this case, we have to put a negative number in, right? Because we're taking it out. So you type in negative $6,030. And then we can use this drop down to say, here's our retained earnings on this date, not on 31, at the end of the month. Retained earnings at the end of the month. Can everybody do this on their own? Well, let's check our work to make sure that I didn't fail you. Answer is not complete. Yes, it is. Oh, I see what I did wrong. See this little tab right here? I need to put for the month ending December 31. Check my work. Answer still not complete. Well, this is embarrassing. And that's where I can bail myself out and go to the teacher edition and find out what in the world could be missing from there. Or maybe I just did. All right. Now it's the balance sheet. Elena, that must have been exactly what you and I were working on, where it said incomplete and it was just the drop-down tabs at the top. I'll make a promise to you guys that if that happens and you lose bogus points for not filling in some piece of the Connect work, but you understand accounting, I'll always make that back up to you. Just remind me. And don't remind me like every day. I get a lot of emails, but I will never penalize you for missing the minutia of it. But I definitely want you to just be able to move through these quickly. All right, now it's the balance sheet. And here's the next thing that's really important for you guys to understand about the balance sheet is this right here. The retained earnings account balance as of December 31 is $4,300. You need this number to fill out the balance sheet correctly. Does that make sense? So you need to make sure that you take the number from retained earnings to do the balance sheet. So in really simple terms, first you do the income statement so that you can get the net income. You take the net income and you put it into the retained earnings, and then you take the finalized retained earnings and that goes into your equity section on your balance sheet. Nod your heads if you're with me. Alex Bonema, I don't know what you look like, but I want to make sure you're happy.
Very happy.
All right, that's all I need. So help us. Where do we start on a balance sheet, Alex Bonema? What's the first thing that we should be looking at? Well, let's make sure we satisfy these. Are we doing the month end or as of December 31? Now remember, a balance sheet is a snapshot in time. Today on December 31, this is what we have. The first thing that we're going to go into is assets. Now we can list the assets. Which ones of these are considered asset accounts? Just start shouting your answer out. Zerfus, now I'm going to rely on you. Tell me one of these that's an asset.
Accounts receivable or cash.
Yes, good job. So all you're doing, guys, is adding in, and you don't have to watch me enter all these in. You guys can do that on your own. But add in your cash number, 25,390. The next one is accounts receivable. And that's 22,390. And what that is this is cash that we have in the bank. This is money that people owe us for sales that we've already made. How about office supplies? Is it an asset, a liability, or an equity? Mr. Parker.
Is it an asset?
You're so smart and good. Yes. Office equipment, those are assets, or office supplies and office equipment are both assets because they are resources that we use to run our business and make money with our business. And that's what an asset is. It's something that we own. So office supplies of 5280 and office equipment of 20,030. Any other assets that you guys can see here? Any other assets? Birthday girl. Group of 4. This is for 10 birthday bonus points. Are there any other assets? Follow my cursor.
Land.
Ashlyn, that was awesome. Great job.
Ashlyn.
10 points.
10 bonus birthday points for Ashlyn. Land is an asset. You need it in order to have a, well, I guess you don't need land, especially now in the world that we're living in. Then all we have to do at the bottom of this, guys, is just go total assets. Let's check our work to make sure that we're satisfied. The first column, nailed it. Everybody with me? Go back to the question. What's the next thing that we need to list on here? Well, that's liabilities. Assets equals liability plus equity. And you can kind of tell the drop-down area, we're just going to put this in for placeholders. We have liabilities and equity. When we list our liabilities, what are we looking at? What could be part of our liabilities that we're running into? Remember that liabilities always say
Payable.
payable. Yes. I don't know who said that because I don't have it on my screen, so I'm going to give Ashlyn the points.
What?
Counts. Listen, this is not a democracy, man. This is a dictatorship. All right, who did say that? Because now I have my screen back up and I want to make sure that you're recognized.
I did.
All right. I won't forget your graciousness. So we have accounts payable. We look at our number. It's 10,580. Type it in. Is there anything else that says payable on here anywhere? No, there is not. So what do we put in the equity column? What are the things we put into the equity column? And this is where it might get a little tricky. Because in that big expanded accounting equation, revenue and expenses are already in the revenue or in the equity category. So some of you might say, yeah, those are definitely things that we have to cover. But remember what we did in the first thing? We made an income statement and we reconciled all of these so we don't have to do it again in the assets. All we need is to say how much common stock do we have and how much retained earnings do we have? Those are the two things that are relevant. So we look at common stock and you can see it listed there at the bottom left-hand column. Common stock of 1,000 or 102,000. Oops, but it does not go in the liability category. In the equity category, we grab common stock. And the other one that we grab is going to be which one? And remember, this is where this comes up. Retained earnings. That's what we pulled off of our statement of retained earnings. That always has to get transferred by you to the balance sheet. So we have common stock of 102,200. And we have retained earnings of 4,340. Now, debits and credits become really important because look at this gorgeous thing right here. Total assets. And then we pull our drop down here. Total equity and liabilities. Assets equals liabilities plus equity. Everything balances. We're in good shape. I just did a little bit of looking. If I click check my work, we can see that it's all finished. Everything looks good. We can move on to the next one. This one, I'm going to have you guys do on your own with all the information that we have. You can do that as we're talking. You can do that within the next 5 days. You get check my work, you get unlimited options, you'll get your points. Everybody feel like they're going to be able to do that on their own? Ken, are you happy? Yes? It looks so nice where you're sitting. I'm jealous of you right now. All right, then what I want to do is you'll finish up your chapter 2 today. I think you've got a lot of tools in your toolbox to do that, but I've got to introduce you to some of the terms in chapter 3. So this is another good time to grab your notes, and I'm going to tell you what's most important for you guys to understand in chapter 3 and try to put it into some real world context so that you'll recognize it when we get into lecture. So unfortunately, PowerPoint is still the best way to go through this. I'll try to make it as fascinating as possible. So chapter 3 is all about how to wrap up your accounting at the end of a time period, right? It's called accounting adjustments, but it's basically just making sure that this accountant says, I got to close the month off, or I've got to close the year off. There's a few transactions that the accountant has to do in order to make sure that those are satisfied. So if we go back into our lecture for chapter 3, and we click on slideshow, here is what we're looking at. So the accounting period. So this can be different quarters. So some companies will say, how do we do in the first quarter? I know when I worked for paint companies, we always got bonuses for our quarterly work. So I knew my profit and loss statement backwards and forwards because I knew that I got a bonus whenever my profit number was solid. And I got a bonus when my sales number from one quarter to the next was valuable. So the accounting period can be a quarter, a month, it can be a whole year, it can be semi-annual, it doesn't matter. It's just, we make these so we can compare ourselves to the year before, right? So like if I own a painting company, I want to know how were my numbers this year compared to last year? So I can tell if I'm growing, if I'm going backwards, if I'm spending more money on supplies, if I'm spending more money on labor. That's what that's for. All right. There's 2 ways of keeping track of your money. Accrual means the minute you sell something, regardless of if they pay you for it or not, you register the sale. Most businesses use accrual. Cash means you don't record the sale until you get paid for it. And you don't record the expense until the cash is already out of your bank account. Accrual seems to be the most important, but you can make an argument for either one. The most important thing for you guys to remember is if you have a cash basis, you can't just switch to accrual. And if you have accrual basis, you can't just switch to cash. Those have to remain stationary in your world. All right. So chapter 3 is all about accounting adjustments. And there's 4 different types of transactions that we have to adjust for when we do this. A deferral of an expense, a deferral of revenue. It's basically saying like, okay, there's an expense coming. We'll handle it later. Deferral of revenue. We made a sale. We collected the money, but we haven't done the work yet. Accrued expenses, which is I bought a bunch of prepaid insurance and I registered as an asset, but I already used 6 months of it. So I need to go back and make sure my numbers accurately reflect that I don't have an asset anymore. I have an expense that's been recognized. Prepaid expenses would be examples like prepaid insurance. So I buy my insurance in January. And then at the end of the quarter, I have the accountant go through and say, hey, tell me what my numbers are. Well, there's 3 months where I no longer have an asset of prepaid insurance, but I have an expense of insurance expense because I paid for the insurance. I used it up. It's not part of my business anymore. All of this is to accurately reflect your business at any time period. We'll go through a few more examples. So adjusting for prepaid insurance. Our company, fast forward, we paid $2,400 to cover insurance for 24 months, and it began on December 1. We recorded it as prepaid insurance. Now remember, prepaid anything is an asset. That has to be one of the lights that goes off in your mind. If it's prepaid, it's an asset. But it was an asset when we bought it in December of 2021. But now that it's the end of the year, we have to look at that and say, we've been paying $100 for insurance every month. Our books say that we have an asset worth $2,400, when reality was every month that the prepaid insurance was used, we need to switch that into an expense category. So at the end of every month, your transaction will look like this. On the balance sheet, you no longer have an asset worth $2,400. You used a month of insurance. Now your asset is only worth $2,300. And now you have an expense that shows up because instead of having this asset that's built up, you've used a little bit of it, and now you have incurred an expense. All right. And I think you guys, at least now you're dangerous enough that when you read about it and watch the videos, you'll feel much better about starting this process. And I'm going to do my best to make sure that I have time for questions and answers to it at the end of the lecture. So supplies is the same thing. Fast forward, purchase supplies for $9,720 in December. But now it's the end of the year and the accountant says, I need to close the books. Well, you take inventory and you go to the supply closet and you count everything and you realize that there's only $8,670 worth of supplies left. So your books say that you own or you have $9,720. You go and take inventory and you find out that there's not that many left. All that means is that in the supply closet, people came in, they got markers, pens, printer paper, whatever, and we don't have $9,700 in supplies anymore. We have $8,670. And we need to take the asset and expense it properly so that our business is accurately reflected for that time period. All right, let's take stock a minute. Did that make sense? Is that all stuff that registered pretty well? No issues? Group of 4 birthday party? You guys happy? All right. Elena, you're not upset with me? All right, then I'm happy. Looks like we're coming up on noon, so I'll try to touch on the most important things and let you guys go through as much as possible when we get into this. All right. So we have a good feeling for supplies. We have a good feeling for prepaid insurance. This one is really important. And I'm going to ask Mr. Rakowski. Rakowski? What do you like to be called?
It's Rakowski.
All right. What do you prefer to be called? Like, what do your friends call you?
Hayden.
All right. Well, there's 2 Haydens, and
Yeah, that's true.
I like one of you better than the other, but I won't say which one. Well, he already left. That is clearly you, Hayden.
Yeah, let's go.
I thought this lecture was going well and he just bailed. What the heck? All right. Hayden, what's depreciation? What in the world is depreciation?
It's like a loss, right?
Very good. Imagine this. You buy a truck from your business.
Goes
right?
down in value over
That's
time.
exactly right. So in accounting, you're making sure that your numbers accurately reflect your business. So when you buy a truck for $20,000, you put that into your paperwork and you say, I've got a truck worth $20,000. When I worked in the window cleaning and pressure washing business, we bought trucks at the end of every year. and then we use them. If I buy a $20,000 truck and I use it for a year, letting a bunch of college students roll around with ladders and window cleaning equipment and goodness knows what's in there, how much is it worth the next year? Well, that's the accountant's job to figure out. That's what happens in depreciation. That's why this next 2 minutes of lecture is important. We need to ask ourselves the question, how much does it cost? How much can we sell it for after we've used it for our business? So the way that we did the books in accounting for our window cleaning business is we said, we buy a truck for $20,000. If everything goes great, that truck is only going to last 5 years before we have to buy a new one. Nod your head if you're with me. That's the useful life. So you have to say, after 5 years, how much is that $20,000 truck going to be worth? My guess is I can dump it for $5,000. Everybody with me so far? I'm making assumptions in my accounting. So these aren't locked in numbers. These are numbers you have to use with your business acumen to say, I buy a truck, the way that I use it in my business, the thing's only going to last 5 years. So we take $20,000 truck, we're going to sell it for $5,000. That's 20,000 minus 5. We have $15,000 over 5 years. Does that make sense to everybody? Let's look at the example so we can fill it in a little bit more clearly. So fast forward, purchases, we're going to call it a truck because it really helps me to make sense of depreciation when I think about trucks. Fast forward, purchases a truck for $26,000. It has an estimated useful life of 5 years. At the end of that 5 years, you could probably sell that truck for $8,000. They purchased the truck December 1, and now they've used it for a month. So we've got to accurately reflect our business. So that means $18,000 over 60 months will be depreciated. Every month they'll roll in depreciation for the truck. Our net cost that the business is going to be responsible for over the 5 years is $18,000. 18,000 divided by 60 is $300. That means every single month there's a $300 depreciation expense. This is also the first time that we have a contra account. One of your questions in your homework will be about a contra account. It's a T account attached to another T account. So the equipment will always have a depreciation account next to it. This is important too. Every single asset that you use, if it loses its value, which is almost all of them except for cash and land, if it loses its value, you have to depreciate it so you can accurately reflect your books. So we bought a $26,000 truck, but every month it becomes $300 less valuable. And that means you put $300 in depreciation expense and $300 into accumulated depreciation. That's how they are measured against each other. That's how the accounting equation stays in balance, is to create an accumulated depreciation account. And the last thing will be, what does it look like on the balance sheet? Now remember, the balance sheet is this beautiful thing that says, at this date and time, here's all my assets, here's all my liabilities, here's all my equities. Well, if you bought a $26,000 truck at the beginning of the year and you're doing your numbers at the end of the year, there's no reason to say that your truck is still worth $26,000. You have to depreciate it out so it's accurately reflected. Guys, you just ate a whole bunch of accounting information. I can tell that I'm going to start losing you soon. So I'm going to switch into questions or concerns. feel confident that you'll have enough tools at your disposal to get through reading the chapter 3, coming with good questions so we can finish it out next week, and being ready to finish out your chapter 2? All right. Then the last 15 minutes is just so you guys can get to lunch at whatever time you want. Or if you want to be ultra diligent, you can finish out your in class so you have nothing going on after that. Questions or concerns, guys? You guys were an awesome audience and I really appreciate it. If you need anything individually, just email me, text me. I'm even starting to check my Instagram messages more frequently because I'm finding some of you guys on there. I just want to be cool. However you want to talk to me, I'll find you there. I just want to make sure that I serve you guys well as you're learning accounting and dealing with some of the headaches of navigating the accounting book. Sound good, everybody? All right, let me close this in prayer and then I'll stay on the line until all your questions are satisfied. Father God, Lord, this week has been tough, and watching somebody that we love lose their girlfriend and the pain that comes with not having our prayers answered, it hurts. And I just pray that you'd help us to give it all to you and to realize that you're in charge and whatever you decide is going to be okay with us. God, you are good and we love you. Amen. All right, you guys have a good week. Thank you so much. You can leave one by one. I'll stay until you're all satisfied. Yeah, birthday party. What questions you got?
We have a question on the chapter